Morning, everybody. It's Debt-Free Joel here. Just wanted to give you guys a weekly update because, hey, what happened this week, right? Well, like I mentioned before on previous, videos that I've done, is that what you really want to be concerned about was two different things from the election. The first was the Electoral College and also the Georgia State Senate runoffs. So, long story short, the Democrats now control the House, the Senate, and the White House. I did not see coming that Georgia was going to have both their senators become Democrat. I would have bet the house on it. I would have never saw it. But now that we do have a democratically controlled Congress and White House, there are some things that are coming. We're going to get a ton of stimulus. You're going to get probably stimulus from like the stimulus check perspective. I think we just, as a government, sent out 600. So they're likely going to send out more money, probably 1,400, depending on what income bracket you are. There's going to be stimulus for the states. So the state that I live in, New York, for example, Governor Cuomo has been screaming at the top of his lungs that the states need more stimulus from the federal government because they have budgetary constraints. All you got to do is look at the MTA because nobody's taking the subway anymore. I think there's going to be an extension on unemployment, right? So depending on what that number is going to be, they're likely going to extend it for a long period of time. So there's going to be supplemental unemployment that's going to be provided to folks that do need it. There's going to be deferred federal student loans for a while, and I'm thinking probably till June or maybe even later than that. And there's probably going to be a push to forgive student loans. I don't think it's going to be the whole thing. I think it's going to be maybe 10,000 or something like that. But there is going to be a push by this Congress to have that happen. Now, all this sounds fantastic. The problem is that we have to realize that nothing is free. Okay? So the way that the federal government is going to approach this, like, think about it this way. The government does not have a bank over here where it just has $1 trillion. Okay, there's nothing over here. What they're going to do is they're going to issue bonds, right? They're going to go into debt. And our biggest lender is China. So you can really see how that relationship's going to go. But more than anything, you don't pay off debt with debt, right? So think about it this way. Imagine you have a car that you can no longer afford. You've been financing a car for a while, but you can no longer afford it. So your parent comes and goes to the bank to take out a loan from the bank to be able to pay off your student loan, or your car loan, I should say. So basically what's happening is that you're basically transferring the debt from one person to another. That's what happens when the government kind of puts stimulus out there. They don't have the money to do so, so they basically borrow money. Now, interest rates are low, so they're going to be able to service the debt. But eventually, interest rates will have to rise, and you're also going to have to raise taxes to be able to pay for all this. And I don't care how much you tax the rich, it's not going to be enough, which means the taxes are going to have to come to middle class and lower class people. So, I'm not debating whether or not these programs are going to be helpful, but you want to make sure that as a federal government, we're also doing this the appropriate way, and we're not necessarily putting the debt burden on our children. Now, from a stock perspective, because you have a Democratic Congress, all these tech companies should be on the lookout. So think about Google and Apple and Facebook, all these firms, these big tech firms that have pretty strong monopolies out here. They're going to be under some serious scrutiny from a taxation perspective, from a freedom of speech perspective. So, whether or not that's going to lead to decreases in stocks for those type of securities, who knows? We're also at some all-time highs now, in terms of just the stock market. Let's be honest, folks. You can be blind and throw a dart at the screen, and wherever it lands, the stock's going to go up, right? That doesn't mean you're good. That just means everybody's buying stocks at the same time, which usually means it's not a good idea, right? Because that means that no one's taking into account risk. Here's my advice. If you have a stock right now, let's say you bought Tesla, or you bought Bitcoin, or whatever the hell you bought, and you have a pretty sizable gain. So let's say you bought something at 1,000 and you have a $600 gain right now, right? So you have a 60% gain. Figure out your exit strategy, right? Most people focus on what they buy rather than when they need to sell, and that's equally important. So figure out your exit strategy. Maybe, you say, all right, I'm comfortable exiting out this security if it hits 30%, right? So anywhere from $600 to $300 gain, I'm fine with, let it run, I don't really care. But the minute it hits 30%, I'm out, right? And you emotionally remove this impact from a stock standpoint, right? A lot of us are influenced by emotion when it comes to money. That's why we're sitting here and everybody's on Instagram and WhatsApp and all this kind of stuff trying to look for, stock ideas. People who've been investing for a while, if you notice, they're pretty calm about it because you have to control yourself. You have to control your behavior when you make investment decisions. So figure out your exit strategy. The third thing I want to bring up is that obviously we're in the new year. So you should be able now to take a look back at your financial goals for 2020 and see if you hit them or not. And then figure out what your financial goals for 2021 are going to be. In my opinion, everybody should have 3 goals. You should have a savings goal, you should have an investing goal, and you should have a charitable goal. Now, I know you. The charitable goal is where I'm going to lose you guys, right? Because saving sounds cool, investing sounds fun, but charity, that should be for somebody else. No, it should be for you, right? You get what you put out, right? So you want to make sure you have a charitable goal. And it doesn't have to be a religious goal for folks that aren't religious. I'm Catholic, so obviously I do give to the church, but I also give to other organizations. You can help family members. You can help other people out who have debt. So it doesn't have to be just some, just give to the church and feel like a charity case. You can have influence on people. And we as Black people, in my opinion, can have more influence on helping each other directly than waiting for the government to somehow come bail us out. So you definitely want to have financial goals for this year. Like I said, saving, investing, and charity. And the last thing I'll say is this. If you live with someone, if you have a fiance, if you have a husband or a wife, and you have financial goals and you don't include them in it, you're asking for problems, right? I'm not here to give you relationship advice, but I am here to give you money advice as well as I know behavior. I'll give you an example. If you, let's say you're a guy, and you want to invest 20% of your money this year, and your significant other wants to save 20% of their money this year, you have a problem because you have two goals that don't align with each other. So start having those conversations, and maybe you guys meet in the middle, 10% to savings, 10% to investing. You only are as strong as your weakest link, and sometimes you're the weakest link. So you have to talk with your spouse, make sure you guys are on the same page, or you're going to have massive problems come the future. So I'll see you guys next time. As always, pay down your debt and always remember that a part of all that you earn is yours to keep. See you next time.